Whether driven by enterprise, manipulation, geopolitical turmoil, or the spread of a pandemic, the winds of change have swiftly swept across every corner of the globe, and Bitcoin has been no exception. Over the past year, Bitcoin's image and presence in the world have changed significantly. As the cryptocurrency space has continued to mature, there's more reliable data than ever before. Market manipulation, while it hasn't disappeared, has loosened its grip on crypto. Now that Bitcoin is back over 10,000, the world is on its toes. Will Bitcoin manage to stay above the 10,000 mark? Perhaps. However, the crypto world is only as strong as its weakest links. Speaking of which, historically, gathering accurate trading data has been a bit of a pain point within the industry. With market manipulation and wash trading rampant in the space, thousands of traders have fallen victim to the traps laid by false representations of the truth. Recently, finance magnate spoke to Bobby Ong, co-founder and chief operating officer at cryptocurrency data aggregator CoinGecko, about the future of Bitcoin and other cryptocurrencies, as well as how his company is working to find and report the truth in the cryptocurrency world. I'm Rachel McIntosh, and this is the Finance Magnates Blockchain Podcast. Bobby, I want to thank you so much for coming on the show. We're so happy to have you.
Yeah, very happy to be on the show. Thank you very much for having me.
Yeah, absolutely. So I know who you are, but can you tell our audience a little bit about yourself and the work that you do and how you got involved in crypto in the first place?
Yeah, sure. I'm Bobby, the co-founder and COO of CoinGecko. I started CoinGecko with my co-founder TMD back in 2014, April 2014. CoinGecko, if for those of you who are not aware, is basically it's actually the largest independent crypto data aggregator in the world. We track basically crypto data, crypto information, for example, price, market cap, trading volume, some social media stats, developer stats for Bitcoin, Ethereum, Litecoin, and 7,000 other cryptocurrencies. And we get this data basically from 400 over exchanges. We are the most comprehensive and the largest database of crypto information. And we're one of the earliest data aggregators in the world. Personally, I got into the space, in the crypto space back in 2013. I first heard about Bitcoin. Slightly after I graduated, I have a degree in economics from University College London. I was teaching myself how to code back then. I was spending a lot of time in programmers forums, and these programmers were talking about Bitcoin, so it got me really curious to find out what's this new form of internet money that everyone's talking about. And I was quite curious because my lecturers didn't talk about Bitcoin when I graduated in 2012. So this was really early in the days, like nobody talked about Bitcoin.
Right.
And I thought like either my lecturers outdated or these programmers are just crazy, like talking about some weird, funny money on the internet. So someone's got to be right and someone's got to be wrong. But I thought like, hey, you know what? Let me just read the white paper, give these guys a benefit of the doubt and see if there's any truth to it. Because I just learned about money supposedly for 3 years of my life. And I read the white paper, sort of makes sense. Having custody of your own funds, holding control of your funds, like without trusting anyone else, without any third party. I bought my first Bitcoin using local Bitcoins back then. And then when I moved the funds from the local Bitcoins wallet to a wallet that I control myself, that's when I knew that this is game changing. Like this is revolutionary, totally changes the concept of money. It's kind of like digital cash, but you store under your bed, but in a more secure manner. And like no governments worldwide can freeze your accounts if you control your own private key. So that was game changing to me. And I think the other analogy that I like to use a lot is basically imagine like you and I having a coffee on a Sunday afternoon at a cafe, and I want to send you like $1 million. You can't do that on a traditional banking system. That will cost you a lot of money. Whereas if it's Bitcoin, I can just send it to you. Immediately you get it in like one confirmation or a few confirmations. And for very low fees, like, I don't know, 50 cents or something like that, compared to what the banks, you have to wait like 3 to 5 days over telegraphic transfer, a 3% fees or whatever, and just slow, cumbersome, expensive, and so on. Also, I like the fact that crypto or blockchain or Bitcoin, as it says, is basically permissionless innovation. And it allows for programmable money. So it allows people to code all these different things and rules. They're basically things that you can't really do with the traditional financial system. And this is essentially what we are seeing happening right now with Ethereum, with all the smart contracts and all this innovation coming along. So I got really interested in this space back in 2013, 2014. I saw the potential in it and sort of made a bet back then that back then when we started CoinGecko, it was about 50 tokens or so. It was quite a nascent small industry, but our view is that anything and everything that can be tokenized will be tokenized. So anything that has value or can have value, it can be tokenized and it can be represented as a form of token. So at this point in time, we have 7,000 tokens, but imagine a future when rules and regulations and all are cleared up, like we'll be representing airline loyalty points from any other shops and all, personal tokens. You then probably have securities for real estates and all, and these can be traded fractional amount of these items can be traded worldwide and all these people. So we'll be talking about millions of tokens in the future. And that's essentially what we at CoinGecko are building the infrastructure, the foundation for anyone everywhere in the world sort of get information about coins and cryptocurrency and tokens easily from one website. Yeah.
Okay, great. So the information that CoinGecko provides, obviously there's market cap, you know, price and that kind of data. Is there any other kinds of data that people can find useful on CoinGecko?
Yeah, so we started originally back then in tracking the social media and development stats. So back then there wasn't really this concept of token, but a lot of these coins were sort of clones of Bitcoin. And basically you have to run a mining software and you have to have development updates on all these coins, all these softwares and all. We still have those. We track Facebook, Twitter, Reddit followers, likes on for these coins to see how active they are being followed by the community. We see how many commits, how many stars, how many watches, how many pull requests that developers are making for each of these coins to show how active development is for each of these coins. So those are the two key things. But I would say by far most people are interested in like sort of the price of each coin, where are they traded, the volume, the market cap of these coins. And then if they are interested, we may start to add more of this data. But I think recently we started noticing a lot of people are interested in getting information about exchanges. There's issues about wash trading, so they want to know which exchange have the real liquidity, which one has fake volumes and all those things. So we are trying to add more information on the exchanges to make it more richer. Also, we're seeing a lot of innovation from the exchanges part, where instead of just offering spot trading, a lot of exchanges have started to offer derivatives trading, so like perpetual swaps, futures, options, and then these days they're launching leverage ETFs. So it's kind of like a chase to keep up with all the innovation that's happening in the crypto space, and we should try to have like represent all this information in the product. I think what we do at CoinGecko, we try to move fast and get all this information, and then a lot of this information that is available on CoinGecko, we make it available for the crypto community to consume and use on their own applications via our API. So basically, if you want to get any price, volume information from CoinGecko, any other data on CoinGecko, you can sort of call our API and consume it for free and use it, because we believe that these are things that will be helpful for the community and will be helpful for the overall crypto user experience, that an app will have the price and people will find it useful to see all this information right from their websites of their choice. So that's what we do. And then we also try to, because this space moves really fast and not everyone has the chance to work full time in the space and to read all the material. So we also do a quarterly report which we publish, and we do all this research to help synthesize some of this data and development to guide people who to know more about the industry.
Right. So there's really like a lot of different metrics that people can use to track on CoinGecko, and that's so cool. And you touched on this briefly earlier, but I want to ask you a little bit more in depth about it. So, as we know, there's been, quite a lot of controversy about wash trading and exchanges over the last year, particularly after, was it BitShares? I forgive me if I can't remember the name of the company. Made that presentation before Bitwise, excuse me, made the presentation before the SEC, where they said, "Look, we know that there's market manipulation happening, and here, this is exactly where it's happening." So, after that point, CoinMarketCap, for example, started flagging kind of what they thought was like reported volume versus what they thought was the actual volume on exchanges. So, what is CoinGecko doing to sort of make the public aware of how and when and where wash trading might be happening?
Yeah, so I think when Bitwise released the report, that was very well published, and I think before they released the report, a lot of people in the industry sort of already know, and it's something that we observe at CoinGecko as well, because a lot of the exchanges that we put on CoinGecko, like total exchange volume, total volume for each coin. Bitcoin, if you look at Bitcoin, the list of exchanges that trades Bitcoin, most of the exchanges that appear at the top are some of these weird small name exchanges, mostly originating from China. May not be China. And after a while, we just couldn't stand looking at all these exchanges as well, because it's clearly manipulated data. They are putting out fake trading data so that to inflate their volume because they want to appear that they have the largest liquidity in the world. It's come to the stage where we came to a conclusion, especially for non-regulated exchanges, that anything that is tracked will be manipulated. Any metric that is tracked will be manipulated. So in this case, trading volume is tracked as an important metric in evaluating exchanges. So a lot of the exchanges have a very strong incentive to manipulate their data. So it's come to the stage where we say that, okay, trading volume is no longer a good indicator of determining an exchange, real liquidity, real volume, real depth. We decided that we had to do something different, and we had to use other alternative metrics in determining the real volume for this exchange. So we launched sometime last year, we launched this thing called a trust score, where instead of just relying on trading volume, we sought all the exchanges on CoinGecko using this algorithm, which is a blended algorithm looking at several different factors. Some of the factors include the bid-ask spread for each trading pair. So we can't believe when we did this exercise, we saw certain exchanges having like a 50-80% bid-ask spread. So it's quite ridiculous, because you make one bid, you make one buy order, you make one sell order, and then you pretty much lose like, I don't know, 60% of or 80% of your coin, because the spread is just huge. And in between this 50% bid-ask spread, there was like $100 million of trades happening between this spread, which is just like clearly wash traded. I saw it in front of my eyes and I was shocked. Okay, that was pretty bad, like wash trading. So bid-ask spread was one. We look at order book depth. So we take the mid price of the last of the trade, and then we take a 2% lower range and 2% upper range, and then imagine summing up all the orders in the 2% range and see how much order that you can sell within the 2% range. So let's say the last done price is $1. You take a 2% range and you sum up all the orders, and then that could be like, I don't know, $50,000 in the order book depth. What we found was that some exchanges, even though they claim to have $100 million of daily trading volume, they only have like $1,000 in their 2% order book depth, which is not good, because if you want to sell like $10,000 of a particular coin, you have like, I don't know, a large amount of slippage, and this clearly shows that there is no liquidity in the exchange. So those are two factors. And then we also look at web traffic analysis. We looked into it way back in 2019. What we saw was that if you think that an exchange that records a high amount, that has real large volume, they will most likely have like a lot of people accessing their website. For example, their exchange website, Binance.com, Coinbase.com, Bitfinex.com, and so on. Of course, this makes an assumption that all exchanges have the same amount of retail and API users. It makes an assumption that the exchanges have the same amount of web versus app users. But assuming those are equal, which is a very rough approximation, it's not perfect. What we saw was that some exchanges that claim to do like, I don't know, hundreds of thousands of millions of hundreds of millions of daily trading volume, they barely receive any web traffic. They only receive, for example, like 10,000 or 50,000 monthly page views. Which doesn't make any sense, because if you claim to have the same amount of trading volume as Binance or Coinbase, then you probably have like the same amount of traffic, or at the very least like 50% or I don't know 70% of their web traffic. But like having a 95% discrepancy in web traffic, that clearly shows that something is off. So that was one of the factors that we used to filter. And we use a bunch of other metrics, and combining all of this, we form a trust score, and then we sort of give a ranking of 1 to 10 for each of these exchanges. And then for each trading pair, we sort of give a green, yellow, red traffic light to sort of determine whether each exchange is sort of real or not really. I mean, the volumes are legit or suspect, for example, and then we sort of rate the exchanges by these metrics that we use. So seems to be working well so far. I mean, if you go to CoinGecko, you probably see like the list of exchanges. You see like Binance, Coinbase, Bitfinex, Kraken. These are the top exchanges which you would expect to see, not some small name exchange at the top for each of these things. So yeah, that's the sort of things that we do, I would say.
Okay, and have you observed? I mean, all of the vetting that you're doing, when it comes to these exchanges, making sure that users are informed. Have you noticed any trends in the ways that users are interacting with these exchanges? Like, do you think that like the efforts that CoinGecko and CoinMarketCap and other data aggregators, excuse me, data aggregators are working working to kind of clean up the space? Do you think that that effort is paying off?
Uh, yes, I think it shows that the exchanges, they know that the era of just cheating their way into like trading volumes no longer
Okay.
working. They can't
Mhm.
really bluff their way through. They have. Well, I've been telling all these exchanges, look, if you want to get a better ranking on CoinGecko, it's easy. Just stop faking things and just do the right thing and
Get it
get
together,
more real
yeah.
users. Don't, yeah, just stop picking things up. Like there's no other easier way. If you do the right thing, you get more natural users. You get rated well automatically because it's all an algorithm.
Mm,
But one of the things that we noticed was, remember I said earlier that anything that gets measured gets manipulated. So these guys,
mhm.
they just have a cheating mindset on the head and they just
Yeah.
want to find a way how to cheat them. So now what we notice is these guys starting to cheat all these different metrics.
Mhm. Oh,
And that's
okay.
inevitable, right? It's kind of a cat and mouse game, and so we started noticing some exchanges buying fake traffic. So we had to start putting in some metrics to see, like, to put in, like, instead of just looking at page views, we had to look at the traffic quality, for example. Are they like bounce rate and all these other
Okay.
things?
Wow.
Yeah, and we look at the order books. Some of them start padding up the order books, and then yeah, so it gets harder and harder, but just got to do what needs to be done to really track and evaluate things. Just going to, yeah, it's kind of like an SEO game where everyone's trying to manipulate their way and rank number one on Google. It's kind of the same thing as well. All these exchanges, they don't just want to find a way to be number one on these aggregator sites. But
Hmm.
one thing's for sure, like consumers are aware of this issue. They are more discreet, they're more discerning. I think it's harder for consumers to take whatever that is displayed on sites like CoinGecko at face value. They would do more research and learn and find out if there's real trading volume. And if they do trade there and they think there's something suspect in the exchange, we get emails from all these people trying to say, hey, something's not right with these things. Like either they can't get an order sold, or and then if we receive a lot of these complaints that, you know what, they say that there's all this order book or there's all these orders in the order books, but we can't sell it to these order books, that means something's wrong, and then we probably put a notice, and then the
Hmm.
exchanges will be sort of pressured to kind of clean up their act in a sense to stop this kind of like really rampant cheating, I would say.
Yeah. Wow. I mean, it's so interesting, but also just so diabolical, like that they're trying to cheat even now after these extra measures have been put in place. Um, how is CoinGecko monetized? How do you make money?
Yeah, sure. So at this point in time, it's I would say a very standard media operation. So we get page views and then we monetize the page views via advertisements.
Hmm.
So yeah, it's pure advertising business model at this point in time. But we are thinking of several different ways how to diversify our revenue sources and
Hmm.
introduce other items to grow. So I think one of the things that we have done recently is we launched an ebook uh, called How to DeFi, which is basically a 200-page, 25,000 word write up on the decentralized finance space.
Hmm.
And we gave it out for free at the start, and now we started charging for it about $15 for $14.99 for one book. Had
Hmm.
some success, I suppose. Probably something that we will expand further on it. But at this point in time, it's still mainly ad driven, but exploring different revenue sources.
Okay, gotcha. And yeah, speaking of the book, you also conducted this research on DeFi. Could you tell us a little bit? You had four key findings from that research, so I'd love to hear more about that.
Yeah, sure. So we at CoinGecko are super interested in DeFi. We think that DeFi is probably going to be like something that will change the world. It's probably
Hmm.
still very early days, and we thought like, you know what, like no one's got like much information. So we wrote the first book on DeFi, which was quite interesting. And then
Hmm.
we thought like, let's do a survey of the people in DeFi and see what how do the people feel about DeFi space at this point in time, snapshot in March 2020. So in March, we did a survey, an online survey across most of our social media channels on LinkedIn, Twitter, newsletter, and got the community to rate the survey. So we conducted a survey of 694 people, close to 700 people. And it's quite interesting. We got So we look at the results and kind of summarize them into 4 key findings. So I'll go through the findings now in brief. So the first finding that we found was that there's a gender gap in DeFi. So of the 694 people that answered the question, like close to nine what's the number exactly? Trying to see the number right now. 91 no 8 yeah 91% of those are male. There's only 9% of female who's in. So I always knew that crypto and blockchain was sort of very male dominated, and it's not surprising because if you think about it, like finance industry is very male dominated, the tech industry is very male dominated, and when you marry them together, obviously it's going to be a male dominated industry. But what was surprising to me was the scale of gender imbalance. 91 only 9% of people involved in DeFi are females, and that's a big problem to have in the space. It's something that we need to talk about. How do we make things more gender inclusive? How do we get more female participation in this space? So I mean, if it's about 30% female, I'm not really surprised. That's sort of expected. But 9% female, that's a pretty big problem, I would say. So the other thing that we also saw was that most of people interested in DeFi pretty much millennials, aged between 20 to 39 years old, which is sort of expected. And and then Gen Z, sort of those between less than 16 years old. There's 1% of people who are into DeFi. So I think something interesting that people should probably play a bigger role to attract some of the younger people as time goes on. Most of our respondents are actually from Asia, followed by Europe and North America, which is sort of expected in the DeFi space. And the second key finding that we found was that stablecoin is a key entryway into DeFi, and I think DAI proved to be surprisingly more popular compared to its market cap rank. So if you look at decentralized into stablecoins, the largest coin by supply or by market cap is basically Tether, followed by USDC, TrueUSD, Paxos, and DAI. So DAI is like the 5th largest stablecoin by market cap or supply. But if you, in our survey, when we ask people which stablecoins do you own, they said that they own Tether, the most popular coin, and then followed by DAI, which was surprising to us, and then followed by USDC, TrueUSD, Paxos. So DAI was like the 5th largest coin by circulation or market cap, but it's the 2nd most popular coin by ownership.
Okay,
so
that's so interesting.
That was exactly. So DAI is an interesting observation there. And stablecoins are very, I would say, play an important role in the DeFi ecosystem and in growing things. So the third insights that we have, let me see, would be that so DeFi protocols in general have quite a high brand awareness. But one of the things that we asked them as well was, have you used any of these DeFi applications in the last 3 months, or do you intend to use them in the next 12 months? They have high brand awareness, but pretty much low usage, I would say. So there's probably a few hypotheses on why it's not really used very popularly. I think some of the reasons that our team came out was maybe because it's too hard to use, the user experience is not great, and so on. So that's probably one of the reasons. But what we found was that the most popular categories for DeFi was that it's obviously Ethereum wallets are most popular, and a decentralized exchange are the most popular categories in DeFi. So most people use a decentralized exchange or wallet. You kind of have to have a wallet to use a DEX, and those are the most popular ones in DeFi. This is followed by decentralized lending. About 50% of people said they heard of DeFi lending. And I think let's look into the decentralized exchange space, right? So if you look at the DEX space, like Kyber network is the most popular DEX, and this is followed by Uniswap and Banco. And I think we look at the Ethereum wallet, MetaMask is the most popular wallet, followed by Argent. In terms of decentralized lending, Make is the most popular app, followed by Compound and InstaDebt. And I think if you look at the overall ecosystem in general, MetaMask is the most popular, followed by Kyber, Maker, Uniswap. So I think it's something that everyone in the space has to start thinking, like, how do we, people have heard about these apps, but how do we get people to use them more often? Is that a way to make it more easy to use, more more sticky? And is this something that DeFi
Right,
developers
right.
think about? Yeah.
Yeah, because at the moment it's like, MetaMask is sort of embedded into these other services, but you kind of almost have to go out of your way to use, something like
Yeah.
Bancor or Augur or Kyber or Uniswap or anything like that. Yeah.
Yeah. So yeah, I would say it's just hard. It's the barrier to entry using DeFi is still relatively high. So even though people
Exactly.
have heard about it, still to make it easier for them to use.
Hmm.
And I guess the last finding that we found was that respondents are pretty much split between wanting to go completely bankless or feeling impartial in doing so. So the question that we asked them was, would you stop relying on your bank completely? And then some of them will say, yes, we stop relying on the banks completely. About 43% of people say so. 44% of people say maybe yes for some transaction, and then the rest say maybe not sure or no. For those that say, 43% is still pretty high for those that say they are willing to go completely
Hmm.
bankless. And one of the reasons, the largest reason that they say they're willing to go completely bankless is that they do not trust the existing banking system.
Yeah.
So 31% of those say they don't trust it, and they just want to find a way to go completely bankless via DeFi. And for those that say that maybe only for some transactions, the main reason because they still relying on banks for some of these transactions.
Hmm.
So yeah, that those are some of the key findings that we found out from this survey.
Yeah, thank you for sharing that. So I want to ask you, you have it's I can see here it says you had 694 respondents from, kind of across your different channels. Were these respondents like, kind of partial to any particular geographic area, or were they spread out all over the world? What do you know about the respondents to this survey?
Yeah, so 46% of these respondents come from Asia,
Okay.
26% from Europe, 15% from North America, and less than 10% from like Africa, South America, and the Oceania region.
Okay, yeah, because I would be really really curious, this question about going bankless, and to the kind of on the same page, I would consider people who don't necessarily have access to banks in the first place. Like, is that kind of a sentiment? I would ask, in the future. I think it's important to explore, like, is that mostly coming from North America? Is that coming from Africa? Is that coming from
Mhm.
Asia? Like, where in the world do people feel like this? That anyway, I digress. So we're doing this interview today, which is June 2nd, Tuesday. This is also probably going to be posted a little bit later today, and we are currently over 10,000 on Bitcoin. So can you talk a little bit about that? Do you have any thoughts, like what's driving the price up? Do you think that this is sort of a continuation of where we were before COVID-19, or is this something else?
I've heard multiple different reasons why
Yeah.
Bitcoin's gone up. Like some of the crazy things I've heard is that, oh, there's riots in America, so buy Bitcoin.
Oh, yeah,
It
definitely.
doesn't make much sense to me, but some of them say that it's correlation with the S&P 500 stock price going up, Bitcoin's
Yeah.
going up. Some people are saying Bitcoin had, on a technical indicator, it had a very high monthly close at the end of May. So this is a bullish signal and Bitcoin's going up. But I think it's probably a combination, or there's no one real reason why things are going up.
Yeah.
I think ever since the halving, like we know, it's generally halving is generally a good sign for the mid range that Bitcoin is probably going to go up in the mid range time, midterm time. We just don't know when. But that being said, like I won't be surprised if it goes down before recovering again. So it's kind of hard. There's no real reason. Yeah, I was trading below 10K, but now it's back into 10K again. So it's hard to say. There's no real reason. Like can't really tell. Like these are some of the factors that people are saying why Bitcoin is going up. I'm certainly excited. I'm looking forward to Bitcoin going up further again. So yeah.
Yeah, definitely. No, I think that's very wise that there isn't necessarily any one thing that's driving the price up. I think too often, like in that Bitcoin spheres, we people try to point to one thing, like as you said, like the riots in America, or the spread of the coronavirus, or the halvening. It's always just this one thing that's making the price go up. But I think you're right that it's a combination of all these different things. But speaking of the coronavirus, you know, obviously the pandemic, the quarantines, everything has had a massive effect on the global economy, and the effect that's likely to continue, possibly over the next year or the next 2 years, or, have ripple effects that will last for a very long time. Do you have any thoughts on, the way that coronavirus has impacted Bitcoin, both in the sense that, obviously there was massive price swings that we saw, but also sort of the way that Bitcoin is thought about and perceived and talked about. For example, before the pandemic, this narrative that Bitcoin is a safe haven asset was really strong. And that narrative has kind of come under question, let's say, a little bit since the coronavirus happened and Bitcoin plummeted along with everything else. What are your thoughts about, the ways that Bitcoin's price has moved this year, and what that's told us about Bitcoin?
Yeah, so during the COVID-19 crash sometime in March, I think, Bitcoin saw a huge crash. Like, I think within the 24 hours period on Black Thursday, 12th of March, Bitcoin fell 40%, which was a very, very drastic fall, which clearly removes any notion that Bitcoin is a good store of value. Clearly it's not. Mm-hmm. But I think if you expand and look at a larger time scale a little bit, like if you look at today, like Bitcoin's back at $10,000, it's gained back everything that is lost during that Black Thursday within a short period of couple of months. And if you compare it to the S&P 500, it hasn't recovered to I don't think it's recovered to the level it was right before the crash, but Bitcoin's recovered. So in that sense, like, is it a good store of value? If you look at a 3-month time scale, I guess so. But if you look at that short period of time, that's very bad store of value. But I think a couple of things, right? So if you look at the March 12th crash where Bitcoin fell down 40%, it was a liquidity crunch and affecting not just Bitcoin, but basically any asset class. And investors who are leveraged on, like, basic investors are over leveraged, and they had margin calls across different asset classes, and they had to sell anything and everything to get cash to cover the holes. And this includes selling gold. So gold is always thought about as a safe haven as well. And our research team did a research, and historically speaking, whenever there's a huge drop in S&P 500 price as an index, gold price generally go up. So this was the case for the past few financial crises since the GFC in 2009, 2008. But for this COVID-19 crash, when the S&P 500 went down, gold went down as well, which was surprising. So investors were basically selling gold, selling Bitcoin, selling everything to cover back their losses elsewhere. But I think what was surprising, was the response of the Fed, right? So they took action very decisively, very quickly, and they pump-primed the market by flooding the market with a lot of new cash. And doesn't make any sense at all. Like, the real economy is struggling. Shops are closing down, restaurants are shut, factories are closed, people getting laid off, but stocks are hitting all-time high, right? Like, this doesn't make any sense. Like, there's such a big disconnect between the financial markets and the real economy. And I think this constant printing of money by the government just inflates away the value of the currency. Basically, it makes each dollar worth less and less. And if you look at Bitcoin in comparison, there's only going to be 21 million Bitcoin. So if US dollars worth less and less every day, and this guy start buying Bitcoin's going to go more and more because of the scarcity effect. So is that a good store of value? I don't know as well. It's hard to say. Seems like, but during short periods of time, it's very, very high volatility. People are selling it up, insane, up and down in a short period of time. So generally speaking, it's not a good store of value, but from a scarcity point of view, it is what it is. You can't print your way out of by printing more, making more Bitcoin, minting more Bitcoin. Whereas the USD, the government is just printing a lot. Try to make it a quick recovery, but we know what happens after that.
Yeah, right. I think that's such a good point, that there is this massive disconnect between financial markets and the real economy. And it's going to be, interesting to say the least, how that's going to play out over the next few years. Do you think that, Bitcoin sort of has more potential at this point? When it comes to correlation with stock markets, with the quote unquote real economy, I mean, obviously there isn't really a Bitcoin economy right now. You can't really go to the store and buy something with Bitcoin unless it's going to be converted into fiat first. But do you think that that is, going to change for Bitcoin over time? Do you think that that necessarily needs to change, or do you think that the role of Bitcoin, is sort of taking on more of a, something like gold, even though it's obviously a lot more volatile than gold, than it is something like a digital cash that has its own sort of daily economy.
Yeah, so I think from a payments point of view, like
Mm.
a lot of people touted that Bitcoin is a very possible use of as a payment solution, but I don't think not many people are using Bitcoin as a means of paying for things.
Mm-hmm.
So the fees are high, and then confirmations are slow as well. But so not many people are using Bitcoin as a form of payment. I think some people are using it as a store of value. People who are living in Venezuela, in Argentina, where the national currencies are even more volatile than
Yeah.
Bitcoin. So some of these people look at Bitcoin as a good store of value. I think it will probably end up being, I think in the long term, like more and more governments and individuals, institutions, and probably government at some point will start putting some portfolio in Bitcoin as like a hedge again, like to as a basket of assets that they
Mm-hmm.
hold. So I think that's going to happen. I think but at this point in time, like it or not, fortunately or unfortunately, a lot of people are looking at Bitcoin as an asset class that is ripe for speculation.
Yeah.
So it's used a lot as a form of speculation. I look at it more from a store value. In terms of payments, no one's really using it.
Mm-hmm.
Yeah, I think what is interesting as well is this impending US versus China Cold War,
Yeah.
and then the USD versus the Chinese yuan search for dominance in the international forex market. So at this point in time, US dollar has the hegemony in international trade, and then like the central banks in the world are all innovating and trying to find a way to launch their central bank digital currency, and this includes China, which is far ahead of the game and trying to internationalize the Chinese renminbi. So I think it'll be interesting to see how this play out, and then to see if Bitcoin has a role in this fight between all these different countries. And
Mm-hmm.
yeah, it's hard to say, but it'll be interesting to see how things play out. All I can say right now is we're entering a very interesting stage in the international monetary system where
Yeah.
I think for the past 30, 40 years, or I think since the Bretton Woods, since Richard Nixon took the US dollar off the gold standard, things have been pretty much the same rules since then, and the rules are being returned during this period of time.
Absolutely. Yeah. Do you think that this 10,000 support level, is here to stay? Do you think we're going to stay over 10,000 for a while, or do you think we're going to continue to dip back down and go back up?
So personally, I think we will dip back down. We will test another low.
Mm-hmm.
How low it will be, I think there's a few support levels up to 5,000 US dollars, up 4 to 6,000 US dollars. I can't tell exactly. Then we will probably shake out a lot of people one last time, and then we'll prime ourselves up for a real boom in 2021. So that's my personal take, but I've known long enough, I've been in the space long enough to know that it's very hard to make prediction in this space. Yeah, I could say anything, and then the market just doesn't want to think. It has its own mind, so you can't really tell. So maybe we've passed the stage of the lows, and then this is the start of boom. I can't really tell, but either way, like it's always good to have some exposure in crypto. For those of you who don't have, like dollar cost average your entry in, and always keep stacking coins.
Yeah, exactly. Bobby, thank you so much for your time. It's been such a pleasure to speak with you.
Thank you very much. I really enjoyed talking to you.
Yeah, great. Do you have any announcements before we go? Can you tell our listeners where they can find you or find CoinGecko?
Yeah. So if you're interested in following CoinGecko, just come to our website, coingecko.com. We maintain a social media account on Twitter, Telegram. Just search for us on CoinGecko, and then you can come and hang out and talk to the team. We're very friendly. If you have any suggestions, just let us know. We're always listening, trying to find ways how to improve CoinGecko.
Okay, awesome. Bobby, take care.
Yep.
Yeah.
Take care. Stay safe.